the world of investment, few avenues hold the allure of real estate. It's tangible, promising, and seemingly safe, often considered a cornerstone of a well-diversified portfolio. However, behind the polished woodwork and painted walls lie hidden risks that many investors only uncover too late. Today, we will reveal these concealed pitfalls and explore how they can shape your investment journey. The first overlooked risk in real estate is market unpredictability. Many individuals enter the market with the expectation of perpetual appreciation, yet market dynamics can shift rapidly. Economic downturns, evolving interest rates, or changes in government policy can lead to volatile market conditions, significantly affecting the value of your investment. Unlike stocks that offer easier exit strategies, real estate can tie up capital due to its illiquid nature. In times of market decline, selling a property might not only be difficult but also result in substantial financial loss. Moving beyond market unpredictability, consider the importance of accurate valuation. Misjudgment in this area can lead to paying too much or expecting too high a return. Often, investors rely on previous sales data, which is inherently backward-looking and may not accurately predict future values. Furthermore, improper valuation may arise from failing to thoroughly inspect a property. Hidden structural flaws or compliance issues can result in unexpected costs, eroding potential profits. Next, let's examine the inherently high transaction costs associated with real estate. Unlike stocks or bonds, buying and selling property incurs significant expenses. Real estate agent commissions, legal fees, and taxes all add up, often absorbing a substantial portion of any profits. Moreover, ongoing costs such as maintenance, management fees, and property taxes can further diminish returns over time, if not carefully calculated and managed. Another often understated risk is the potential for problematic tenants when investing in rental properties. Screening processes might miss key red flags, leading to issues from late payments to costly property damage. Legal disputes with the tenants can not only be financially draining, but also time-consuming. Landlords must also contend with vacancy risks. Properties without tenants generate no income, yet still incur costs, impacting the overall financial performance. Additionally, location can present its own set of challenges. While a property may seem promising based on current development trends, long-term projections can be misleading. Factors such as environmental changes, shifts in local job markets, or infrastructural developments, or lack thereof, can turn a once desirable area into a less favorable investment. Furthermore, regulatory and compliance burdens add another layer of complexity. Zoning laws, building codes, and environmental regulations can change, imposing additional costs or restricting the use of your property. Staying informed and adaptable is essential to navigating these hurdles without incurring unforeseen penalties or limitations. Finally, it's essential to address the psychological biases that can cloud judgment in real estate. A common error is the overestimation of returns fueled by optimism or attachment to properties. Emotions must be kept in check, and decisions grounded in data and thorough analysis, not sentiment or market hype. In conclusion, while real estate offers unique opportunities and potential rewards, the path is not devoid of hazards. Investors must approach the market with a comprehensive understanding of not just the visible attributes, but the covert risks that lie beneath. Thorough research, diligent planning, and ongoing learning are paramount to navigating these uncertainties. By acknowledging and preparing for these hidden risks, investors can safeguard their investments and strive towards more secure, lucrative outcomes. Thank you for joining us as we revealed the hidden risks in real estate investments. We hope this insight empowers you in your financial endeavors. Stay informed, stay prudent, and always look beneath the surface. Until next time, invest wisely.